I hope all of you are good, and today is a very exciting lecture that I'm going to be with you. This is a strategic case study examination, and this is common for November attempt and February. This is the traditions in CIMA exams that it falls for 2 attempts. So in case if someone don't pass in first attempt, the same preparation will be required. It's very important for you to read this statement. So we are aware that there have been and remain a significant amount of change globally. To assist with clarity and fairness, we do not expect students to factor these changes in when responding to. For example, this is what he want to say, that whatever is going in the globe has nothing to do with us. We will follow the generic study global other impacts. So this is very important, not to bring any kind of geopolitical points in your conversation. So you always will be in the context. So you will not write the journal points and placed in. No, you should be always in a context. Answer that makes relevant reference to the current affairs will of course will be marked on their merit. But this is just a caution. Obviously, when we will do practice, we will do the mocks, you will be very clear what to write. We will sort out this in the practice part. Now, every time when the case study comes in, it has a standard template. So for me as a trainer teaching over the year, it is almost the same case, same observations, which I will tell you shortly. So introduction, what is this company, when it was formed, which country they are in, which currency they will use, and are they following IFRS, which is International Financial Reporting Standards, or they are going to use US GAAP. Because this is a British qualification and IFRS is prevalent in Britain and rest of the world. And surprisingly interesting for you is after 2014, all the American companies, they are following IFRS, which are listed in NASDAQ, New York Stock Exchange. So even US GAAP is no more effective for the listed companies. So that's good that you will be a little bit discussing about IFRF. Already there are exams where they have tested which you are exempted, so you don't need to worry. Even you don't know even a single IFRS, you will still pass this exam. Now it's very important that we should know the industry. So he's going to talk about lithium mining industry, means how we get lithium, what are the methods to extract them, are there any hard rocks mining, traditional mines, direct lithium extractions. These are the methods to extract. The more advanced has more efficiency, but we need to see the other factors. This exam is very humanistic one. For example, maybe as an accountants, finance guys, we don't think about environment. We don't care about social. We look governance, that's fine. But generally companies, big, very large companies, even in some countries, not thinking about ESG. Okay, they are working on governance part, but the social and environmental part is still not being in consideration. While CIMA wants to make sure that your future endeavors have a deep, passionate heart, feelings for environment, safety, health, and governance. So out of these industries, after understanding the functions, the most important for you is to understand how a corporation impacts the environment, health, and safety. This is very important. This I will explain you in detail. Even if you are not a science background, it's going to be very, very easy and a piece of cake. We're not going to be engineers. We're not going to be a mining specialist. We need a specific information to extract from it, which I will tell you what is this information. And 100%, I'm going to make a summary for you, which you need to memorize. So there's no stress that you should take in, that you don't know what is lithium, potassium, or calcium, or magnesium. These are just words, and we are least concerned about a scientific knowledge to pass this exam. Moving forward, on page number 9, if you see, there is a heading and there is a page reference number. So if you see 7 number, it is Roto. So we will call it Roto. Extracts from Roto's annual reports. That's a very important. If me and you has to invest, if you are investing in stocks, bonds, derivative, future markets, you know that first of all, we need to see an annual report of that company. And then it makes sense to us, and then we can take decisions. If you don't do that practice, then obviously there are high probability that you will lose your investments. So because I'm in high level investments as a professional, so I look into these things very deeply, and you should also do that. So 9 is an annual report. We will get some extracts of the annual report, which will give us a strategic understanding what this company is trying to achieve, what challenges they have, and what achievements they did it. So that will be a quite interesting analysis. It's very important for section. So first, let me also tell you this lithium mining, hard rocks, traditional, direct, spot versus future markets. These are all section number 1. I will recall your knowledge of the last class, where I explained you very well that there are 3 sections of exam. 1 is the business, second is finance, and the third is risk and internal control. So the way they made this, the first 7 pages are related to the section number 1. Then moving forward, board of directors is section number 3, which is related to governance, like what's the qualification experience of these board members? Are they properly aligned? Their reporting structure is according to the regulations. That's what they do as a board, and what are their main principal risk that they have identified. Of course, there are so many that you identify. That is your area to build up your discussions on. So this is section number 3, which I told you is page number 9, 11, and 12. So you should also know, when you read the information in the case, which section it belongs to, because each section has a different understanding of sorting the questions. And moving forward is extract from the financial statement of your competitor and share price history. These 2 combined with extract from annual reports, these 3 are your section number 2, which is financial. So what I'm going to do is I will start my discussion from section number 2, which will make you a comprehensive understanding, because all of us are from finance background and deals with figures, numbers on daily basis. So I always experience that it makes more ease for all of our students that we start with section number 2 and finish it in a very comprehensive way. So today our section will be section number 2. Now, there are some new stories has been given always in the case. That is the latest advancement. So, for example, whatever industry you work in, so you know that after 5 years this will happen. Now, this is for lithium. So, for example, in England, they have a vision in 2026, there will be no diesel car left on the roads. The Europe, UK, and similar kind of countries, they are moving for zero emission, carbon free environment. So means that lithium will be used as a battery production, and the consumption for lithium will increase, and the technology related to it will grow. So that will be the new stories that can impact your present. I always give example of Nokia. Nokia was my and yours first phone, mobile phone. There was a time that everyone carries Nokia mobile, but now Nokia is no more in the race because Apple, Samsung, and a couple of other key players took the leadership from them's market share. So if you don't update yourself and if you don't innovate over the period of time, then you face an obsolescence in your product, and ultimately you lose the market share, and the new companies can come in and take your whole market share, and you remain just a small company, or they even acquire you. Here the case will start. This is section number 1. I'll read a little bit introduction because that's important. So Roto is a quoted company. Quoted means listed. So you are listed in stock exchange, and means that you are a bigger size company because small companies cannot register with stock exchange. So it gives us satisfaction that we are talking about a sophisticated environment, and a company that mines lithium for sales to manufacturers, which then use the metal in the manufacture of various products, including rechargeable batteries. Now, this is their business model, and very important for you is you are a senior manager in finance function. So this I explained you last time as well, that you are not a chief financial officer. So you are not supposed to take any decisions in your questions. You have to tell the board, this looks good, this looks bad. Now, board need to take an effective decision. So always keep in your mind, that don't get excited, even if you feel this is good to say, but don't take any position in your exams. That's really important. Don't miss this point. Sometimes when we read the scenario, when we see the question will come like this, that should they acquire their competitors? Should they start a new company? Should they start a new branch? Should they start a new division? Should they acquire? Should they sell themselves and exit from the market? These questions, even you feel yes, you cannot say yes. If you say yes, you will not pass. You have to tell, if we sell the company, this is the advantage, and if we don't sell it, this is the advantage. If you follow this way, you will see that you will pass in your first attempt. Now, you're a senior manager in finance function. You report directly to the board and advise on special projects and strategic matters. So because it's a strategic case study, you don't look into operational matters, you just look into strategic matters, that means that our answer should be based on strategic points, not the operational point. For example, if I say liquidity is not a strategic point, it's an operational matter. Your working capital is also a strategic matter, is a not strategic matter. So these points has no weightage for examiner. But if you talk about share price, board structure, corporate governance, these are the points which consider as strategic points in the exams. So that's also a very interesting key information that you should make your notes on. So it's the head office is in Poor land does not exist in the world. It's just a way, I mean, if you replace it with Scotland, so it makes more sense, but examiner wants to be neutral, as CIMA don't want to give any country, just to keep it fair and unbiased. So Poland is a fake country where this fake company exists, Roto, a developed country that has an active and well-regulated stock exchange. Here we have some important value because it's a developed countries like America or United Kingdom where the stock exchange is regulated, where there is a lot of investor in the stock exchange. The share price movement will reflect how company is performing. If the share price will go up, means investors are happy, company is doing good. But if the share price will go down, then investors will not be happy and the stakeholder will be upset. So with this developed country word, you can see the information of the share and the link of the company performance is directly associated. So that's very important. Poland currency is P dollar, so P dollar will be used. Poland require companies to their financial statements in accordance with international financial reporting standards, which we call as IFRS. So, but even you don't know IFRS, so it doesn't matter because it's not an accounting exam. It's a strategic leadership exam where you need to use your skills about looking forward and suggesting things based on your strategic knowledge. Roto owns and operate lithium mines in 6 countries, so means they are really a big and good sized company. Now he will tell you about lithium mining, which is we will see. And just an important information, obviously this is related to section number 1, but most of the lithium at this point of time is by 2020, 30, they will increase to 4 million, and mostly they are used in batteries for EV, and that's what it is. One, mostly they extract traditional, but more than hard rocks are the more weightage, or you can say more percentage in terms of methods. This we will go through what are these methods, what are the technical information. This is some importance, but as I told you, it's not that way that you need to be a scientist, so I'm not much worried about that. He told you about Roto. It was founded in 1950. So in 2024, it is around 74 years old. It's quite a good time and was quoted on Poland Stock Exchange in 1972. So this is a very important information. Now, you should know that there is a way to grade the exam. So examiner who checks your markers, the one who marks your exams, they always say there is a big weightage of reproduction of pre-seen information in exam. So that's why you will see when we'll do the mock exam, we'll push you to reproduce a lot of information from the case study, which will not be less than 60 to 65% of your real exam. So it means that understanding pre-seen, getting the key informations in your mind is very, very important. You should be in a blink of your eye, you should know it was formed in 1950 and in 1972 it was in stock exchange. So that's the way you need to go on. They own and operate a single large open-pit lithium mine with an adjacent processing plant that supply lithium carbonate to a wide range of industrial customers. The company has grown steadily since. Roto now owns and operates 6 hard rock mines and 3 traditional brine mines located in total of 6 different countries. So it's showing you the size. Here, as a finance guy, I'm thinking we need entities in different countries. What will be the structure? Are we a holding company, or they are subsidiaries? What shareholdings they have? Which currencies they have, and if I am bringing money from there in my head office and I'm sending money there for purchases, it means that I need to make sure of my interest rate calculation, currency exchange fluctuations I have. I need to look into swapping, hedging. So from this information, my mind start working that how I need to look into the information. And that's make it very interesting that sky is the limit to think about the strategic matters of a company who is a listed company and having 6 country operations. Also, I do care like how they treat their employees, because exam will definitely ask this point. Are they giving good salary? Are a company who is in America or England, and what they do is they give very less salaries in, say, Taiwan and some other countries where there's the human law or HR laws are not that way strong. So these are the points which is related to ESG, and these all points should be in your mind to solve section number 1, 2, and 3. Today I'm more focused on 2. I'm just reading this information about company. So they acquired newest mine in 2024. So there are 3 figures you remember. 1950 they formed, 1972 they listed, and 2004 they acquire a mine. Each mine was acquired on the basis of geological survey, the result of which suggests that there is substantial deposits of lithium. It is unlikely that Roto will acquire any further new mines. So always this information is important, that they are not interested in any other mines. What are the reasons that we will look into? Okay, this is all lithium-based information, and there is a bit of information. He says the company's board and the senior team is based in its head office in Portland. Portland's capital city is a convenient location from which to manage multinational business operations, although none of Roto's mines are located there. So corporate office is always somewhere else, as you know, and the mines are somewhere else. This is you can see in ADNOC or Aramco that head offices are far away from, and it's for the safety, health, and other purposes. That's the same model that they have. Okay, so this is all. It is somehow financial information. That's why I'm going to read it. That they have 1, 2, 3, and 4 products, and these products are percentage to their revenue, and total is 100%. So you can see that 45% revenue comes from the battery grade lithium they use for EV industry. And as we know, in EV industry will grow because of the population factors and carbon fee commitment to the rest of the world. As you know that, but the rest of the opposite parties, they want to fund and they want to commit for a carbon-free world. So it depends what will be the global power shift, and if things goes traditionally, the concept of EV electric vehicles will grow in the world, and obviously the consumption of lithium will also go because more companies will research to make batteries, and you can expect that currently you are 45, so you will increase with the passage of time. Now the non-battery 26 and botulinum is 23, and high purity lithium metal, which is used by aircraft industry, that is 6%. So you can see like all sectors, health sectors, pharmaceutical, what you called aircraft, automobile industry, and engines. I mean, sky's the limit. Where there's a machine, there is lithium requirement. Now, this is the section number 3, information. What is their vision, mission, values, what board they have. This is next lecture when I'll give you section number 3. I will tell you how to criticize, evaluate. It's very important that our CFO should be a qualified guy. Our CEO should be relevant, educated, experienced, chief compliance officer, chief human resource officer, chief people officer. I mean, everyone should be relevantly qualified, having educational and industry background. Then we will call them most relevant. So that's a common sense. So this way, I will critically evaluate, give you points to write in your real exams. But most important for you is you should know what's the name of the managing director, CFO. Here, CFO name is Martin. You can memorize as Martin or Jacobs. That's your choice. One of the name you have to memorize. 2 names are not required because that will be reproduced in the exam. So designation, name, a little bit of background in the company is also important. And who is who in which committee or functions, this is also very important. So this information, obviously I'll go in detail because today I want to discuss section number 2. That's why I'm just skipping it. Now this information is for section number 2, where we have a profit and loss for Roto. We have changes in equity, movement for the year, and shareholders. This is the shareholders interested stuff because they are interested in their money, which is called equity. And we have consolidated statement of financial position. That is also very important. We will go through it shortly. And then we have a competitors. So extract from competitors financial statements. They are Lithdig. Lithdig is the competitor, and also the profit and loss, changes in equity, and the financial position is given. And then he gave you a share price movement that in 2019 it was almost $4. Then it shifts, it goes at a very high point in 2023, which is between 25 to 30. You can say 28, for example, and then it has lost the interest of the shareholders. And at the moment, they are stuck up in somewhere 5 to 7 average price for their share. And they have tell you that there is a beta is 1.63. What does it mean? I'm going to explain you shortly, but these were the financial information. And these are news stories, like what's going to happen to the mobiles. So this you already have read it. Now that's just a brief information about the case. And now I'm going to analyze these information at how we will do in the real exam. So as I said, this is section number 2, and things to discuss for today is we will first see the Preseen case study, which is already with you, which you confirm that you have already gone through. Then I will build up some analysis around this information. I will do a couple of exercises with you in order to get your knowledge in line. And then we will see a real exam format, practice questions, and then in the end, bookish knowledge, that because most of you haven't studied since long, so we want to bring you back in a bookish world. So at the end, there is additional information, like for example, if you forget what was a beta, so beta is explained, what was a dividend, what is, for example, the methods of investments, mergers and acquisitions, valuations. This all, if you have forgotten, that's no worry at all. You will be given all this information shortly. So I'm going to move forward. This I already explained you that here is the section number 2, this one, financial statements and share history. This will be the area that is financial section 2, and I'm going to build up. Just to remind you, you have 3-hour exam, and each hour you have a section. So section has 60 and it has 50-50, means both questions. One question you will answer, you will write 30 minutes, and the other question you are going to write is also 30 minutes. So equal weightage so 1 hour divided by 2, 30 minutes you have for each. If you will not manage your time, you may get 40 minutes in your part 1, section 2. So then obviously you will not be able to answer part B nicely. That's why we need to be good in time management, and this we will learn in the practice sessions. And 50% is to pass. So means that if it is 33% of total exam, so you have to take half of it to pass it. Now, Preseen case study, because I was opening the original case study, so it's a repeated information. It's a quoted company, so I'll not read it for you. But here there are some good preparation for you, so you can overview in one slide, because in case it was vertical, so sometimes you can't able to spot in a right way. So I'm going to make it for you. So this is, according to international financial reporting standards, a balance sheet need to be prepared, or profit and loss or financial statement should be prepared in comparative. This is a basic rule. So it's a comparative, like last year, this year, 2024, 2023. So you can see a very alarming situation with this company, which is Roto. You can see like they had 8.2 million in last year, and they have dropped to 7.5 million. So that's a first sad information for them. And you can see that when the sale was big, the cost was less. And now the operating cost has increased from last year. Sale has decreased, cost has increased. That's a disastrous situation so far. And obviously, finance cost has not changed. I mean that this year the company didn't took any new loans that didn't cost you any kind of financial cost. Well, because tax is proportionate to profit, so that will be that way, and the rest there's no other observations. Now you see the competitor, the Dig, is 10.2 million. So you can see that the competitor of our Roto, you are Roto actually, you should think like Roto. So till your exams, you should be a senior manager in finance function, and you should be very clear about who's your CFO, who's your CEO, how many branches you have, when you were quoted, when you were acquired the last mine. This information should be in your head. Who is your CFO, who is your CEO, who is your human resource guy? This all information, like, if I go to my office, I know what the name of my chief people officer. I don't need to memorize. Same way you need to do till your exam. It is really, really required that you start thinking that you are a real finance function manager. So you can see that 10.2 million, and this year it becomes 9.6. So there is a downfall in expense in the sales. And here you saw revenue was also declining. So one journal conclusion, or you can say a point we can raise, that the industry, two major leaders are suffering a decline in sales. Now the question will arise in section number 1, that why it is happening, what's going on, because figures are impact of some policies and procedure, what they did with sales team, credit policies, market share, these kind of things will be coming in our brain shortly and precisely. Now, you can also see same trend we saw that the operating cost of the competitor is also increasing. So means that there is a serious issue with the industry. I feel with the industry, unless we get some more information that what's going on around the industry. And sometimes if you are 70 years old company, your fixed cost has recovered, so you have variable cost, but you have other factors that you can have obsolete assets that you need to replace. If you will replace it, so then you have more depreciations. So there are a couple of points that we will build up. It's just starting. We can also see that the competitor also did not increase the leverage or take any loans. So finance cost is fixed and almost the same, exactly the same. What's the reason why they are not taking any further loans? Why are they on hold strategy? Are they not growing? These are the questions that come in our head, top of my mind, but there will be more detailed discussions about them. Tax expenses is proportionate to the profit, so that's not a consideration. So these are observations in profit and loss. Let's move towards the changes in equity. Now, as you know that this is the profit for the year, which is 1.8 here, and in the statement of changes, it will come in 1.8. This is the profit for the year. And what a surprising observation that they give 1.684 million to the shareholders as a dividend, as return on their investments. It means that they want to please the shareholders, and on the other side, they are not investing any money in the company. So how company will grow if you will give all your profit? I mean, if we take a percentage, it should not be less than 84, 85% or approx, and this much of money, if you are giving to the shareholders, it require a question mark that why shareholders are so greedy, or we need to get too much dividend to them for retaining, or they want to leave the company and we want to tell them, no, we'll give you the max dividend as we can. So this is my observation that the how company will grow if you are giving too much dividend back to the company. This is a very, very serious thought we should give it. Then you can see like they have quite a big amount of loss on translation, while if you see your competitor, which equity is more than your total equity was 4.8, they have 7.5, you are 4.8, they are 8.8, double of. In terms of equity, they are almost the double of your the size. So but you see their losses, and if you see their dividend policy, almost 50% they give in dividend versus almost 84% they give. So there is something wrong with Roto, which is your company, and it's just a beginning. We don't have much information, but slowly, as we will be in analysis, there are more points will come in that will be a base for our analysis. The most important skill that you have to acquire is a strategic financial thinking, that what could be a possibility of this kind of circumstances, because we have only 22 pages, but our mind has more points to reproduce in exam for analysis. So here is the analysis for the equity. Now we can compare the balance sheet of Roto, which is your company, and Lithic as a competitor company. You saw that there is a decline in asset value. So it was 4.34, slightly reduced 7.27. Goodwill remains same, means they don't have any merger acquisition this year, because goodwill arises from acquisition. When we buy a company, we pay higher prices than the market. The difference is your goodwill. Goodwill need to be tested and reviewed based on the market conditions. That's just the information, nothing to worry. And intangible assets, we can see there is a slight increase in intangible asset, which require an explanation that what is this intangible asset, what they develop, is it internally generated asset because we all has been capitalized according to IFRS rules, or it is bought from the other sources. This we need to look into more details as the time comes in. Inventory reduced, so means sale is also reduced, which we saw there. There's a direct impact between inventory and sales. Trade receivable also reduced, and bank balance is slightly improved. And let's go here and see. So your competitor has exactly the same property, plant, out of coincidence, and their asset has increased while Roto assets has decreased. So means that Lithic is in a better position. They also have the same goodwill, so the same points that I mentioned for Roto. The intangible assets also increase. What is the class of this intangible asset? This we need further information on that. Now, current assets also increased, so means that inventory has increased, means they are producing stock, and also because the sales has dropped a bit, so maybe they are building up stock, which is not good, because battery has a life and it can obsolete in generation as well. So that can be a risk discussed when the relevant risk will be sorted in section number 3. Now moving forward, trade receivable also decreased, so means that they are recovering and converting into other shapes. What's the reason? We will see bank balance has reduced. We also need to see that what happening to their bank in hand, cash in bank in cash in hands. This also be an important consideration. Now let's compare the share. They have 3.5, you have 3, so they are bigger than you in assets, they are bigger than you in equity. Currency reserves you have more. They have increased, yours increase as well. Retained earning also increase, and their retained earning is the earning for the year plus any kind of brought forward retained earning coming from the last year, minus any dividend. That's the formula. If you see the borrowings, no change. So finance cost was the same also, and competitor is doing the same. Means this is a market, something is in the market that causing sales gone out of the hands, and cost of operation for Roto is increased. What's the reason? These all points we need to think about when it comes to a relevant time. Now, trade payables reduced, tax liability according to the percentage. Same here, tax liability has decreased because the profit in comparison with last year has decreased. So here you go with your statement of financial position. Very interesting discussion we need to do for the share price. So I will make a line for you. This is the line. Let's consider you are a Roto shareholder, senior finance manager, for example. You can see such a volatile company. Its share value change like a weather. Every summer every season there's a new price, new. So we need to know the reasons to what are the reasons for this peaks. But we, as an exam pattern, you should remember the lowest price highest priced, the average price, and you should memorize the beta, which is 1.63. Now, let me revise you, what is beta? Beta is a measure of volatility. So it tells you if the stock market is more volatile or your share is more volatile, or if they are equally volatile. For example, 10% increase in market index, 10% increase in my price of the share. So I will say beta is equal to 1. But if there is an imbalance, means it's greater than 1 or lower than 1, then it will create a problem, fluctuations. That's what is beta for. We do have other symbols in finance, which is what you call as delta, gamma, and a couple of other, which has its own meanings and different propositions. So here we go. We discuss a couple of points that we need to keep in mind, and all questions will be based on them. So this was the pre-scene. Now what I did for your convenience, because you need to memorize these percentages, it should be in your mind that the Roto revenue has decreased 4.7%. It should be in your mind. If not, forget you will pass the exam. So that's why I made these ready-made, easy to cook, a red velvet calculation for you, that we will build paragraphs in our real exams, in mock exams and in the real exams. And we need to do a commentary on Roto and Leith-Dig in order to show our pre-scene information. You can, and as I told you, like if your answer has 1,000 words, so you're talking about at least 6,000 words reusing the pre-scene information. So that's important. This is 6 slides are having all the financial commentary. So if you print them, you write it with yourself, and you don't need to memorize 2,000 figures. Like you just have to, because when we do the commentary, we don't say figure has dropped from 8.2 million to 7.5 million. No, this is not a strategic way. Strategic way is that we say that the sale has dropped, slight dip in the sale is with 4.7, while the sales change in Leith-Dig is 5.5. This way we need to. So just memorize revenue, operating cost, profit. There's no significant increase or decrease in finance cost, and the profit of the year has declined 21%. So it's like 3 or 4 lines in your paragraph that's gonna make you pass. If you don't do that, examiner is going to mind it that you don't prepare it pre-scene information in a better way. These 3 ratios, we don't need to look into net profit margins and this and that. This is a little bit operating ratios. We look to the strategic ratios. But there are some we added for you, so just for your information. Now, very important, these 3 ratios, which is return on capital employed, return on assets, and return on equity. If you see return on equity, means the money of the owners has been utilized in an efficient way by Roto, while they put more money and they are getting 42% in 2023, while 30% here, while they have. So the return on equity of the Roto means you are doing a good multiplication or increase in the return on equity, while return on asset has reduced for both, because your sale is also declining. So that's why your utilization of your asset is also falling. So return on asset has dramatically fallen because of the drop in sales, direct impact. Capital employed also has declined from 34.2 to 27.9. 9. So this also is a good information. Last three ratios you have to keep in your mind. I mean, if I go back, this is revenue, operating cost, and profit for the year, and this one. So there are 5 here, 3 here. So only 8, and these will be discussed. This will be written in your commentary in one paragraph. And it sounds like new to you, but honestly, like it's the same case study, same figures. Imagine like when you are free, just start recalling how much was the turnover increase, revenue increase, cost increase, profit decrease. This is not that way a rocket science. I mean, at the end, I will tell you, I summarize for you. These are 10 ratios. How many they are? 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 ratios. 9 ratios. We have kept it here. That is how much is this, how much this time. And this is your paragraph that you have to write, because you can't make a table. It's a Word document. So and table is not strategic. We don't make strategic tables in the reports. We have to write a paragraph for the board. So assuming that if you cover all these points in a paragraph, believe me, you are pass, because that's the way we need to prepare it. I started my discussion with all these percentages. I explained you. And this is what ready-made available for you. You don't need to work, In my exam, strategic case study, I will tell you, I passed first time. I didn't use calculator. There was no calculation question. So in your exam also, there's no calculation questions. Calculations we have to do now, and then we have to bring a commentary, reproduce it, and then make a strategic argument for the asked questions. And you will see now a couple of things. So, but I will do like plant decreased, a tangible asset increased 10.9%. Try to remember. And then inventory decreased, receivable decreased, bank increase, asset on average. But their assets has totally increased, right? So that's the observation. So in terms of asset, performance would be different. And their property, plant, and equipment also has increased. I mean, they have invested in their assets. So what was the story? What happened to the old asset? Was it depleted? This is we will see when more information will come in. Okay, let's talk about equity. I have already talked about equity, that the most important information was dividend. We have to write one paragraph for dividend. This is one paragraph for share price, one paragraph for all these ratios. I'm telling you your question and answer right now. You will see this in your exam. It's a very predicted exam, and we will prepare. If you will follow for a while my suggestion and advices, you will pass this exam like this. Imagine like I'm sitting in my final exams next week. Section 2 comes. I read the questions. Or any kind of question comes, require me a specific way to answer. The first way is I need to write a commentary paragraph to explain the exam marker, that what is the financial health of Roto and the Lith take. So means that I have to tell that revenue has gone this much, cost of goods sold gone this much, operating profit has gone this much. Then I will come to the second slide, which is more into other return on capital employed, return on assets. Then I will come to the third slide where I have assets. Then I will come to the fourth slide where equity. And then obviously this is my last where I am talking about gearing, interest coverage, interest rate, dividend cover. This all I will write in one paragraph, finish it off. Then next paragraph, I'm going to talk about share value, because if I will not do, he will understand, he or she will feel that I don't know what is a strategic finance. Strategic finance requires talking about share capital. So as I told you, I will tell the minimum price, maximum price, average price. Then I will discuss the beta, and there is an ungeared beta, which I will explain you. So you will be ready for this paragraph. And then one observation we will raise, that is dividend that Roto has given 80-90% of their profit for the year to the one. So our preparation is on a pass model, like we are preparing you, so you should pass in the first attempt. So I'm telling you how to write, what to write, what to read. This is a very focused training. I mean, if we want to discuss ratio, sky's the limit, but we will retain ourselves to the strategic ratios required to pass the CIMA exam in the first attempt. And obviously, we can discuss anything you feel comfortable, and that's what is the purpose of these classes. So asset we discussed, then we saw share capital is fixed, of course, currency reserve has increased. So it can have a discussion about foreign currency reserves. So they have in 6 locations. So there are some reserves coming from there. Retained earning has increased, and now if you see the competitors, they are better. They are in a better form. They are bigger than us in terms of equity and assets. Because in section number 1, you will discuss the competitor analysis in other way. So here we are doing the financial analysis. In section 1, you will do the competitor analysis by using a framework, which is also, because section number 1 also predicted stakeholder analysis, shareholder analysis are compulsory part of the exams. This I already explained you about dividends. So this reserves, so keep it. These 2 observations are more than enough for us. Here we have a summary of all that what we did: capital employed, return on capital employed, asset turnover, operating profit, gearing. Yeah, okay, I can explain you some terms maybe you forgot or you need more clarity on them. So gearing is the capacity to survive long-term, ability to pay your long-term debts, fixed cost of debts, that is a gearing. So gearing has 2 types: operating, which is for less than 1 year, and financial, which is for more than 1 year. So we have gearing, which is, so anytime if your gearing goes 50% above, as a general formula, I'm just telling you, obviously some industries are high geared. So it becomes risky to give you. I'll give you one retail example, like your example. If your salary is 100,000 a month and your car loan, home loan, personal loan exceed 50,000, so no bank is going to lend you because they will feel that your leverage or gearing is high. You are in a red light, they call it. So if you are below 50%, say below 30%, you are a very good candidate for financing or funding. While you see the competitor is in a very good range, 34. So their long-term solvency is very good, while here the long-term solvency is in trouble. And what else? Yeah, this is important. So interest coverage means how much profit they have to give their profit after tax, after interest, means after giving interest and dividends, they are interest only, how much money, how many times they can still give the interest coverage. Obviously the ratio, if it is higher like them, they have 13.8 times interest coverage, that they have a coverage in terms of money to pay their interest up to 11 times, which is good. So financial health in terms of solvency is a very great challenge for Roto because their gearing is high. Why it is high, we need to look at. And also interest rate is interesting because they are almost 2 big key players. They are 2 equal size. So when they go to the bank give them the same rate because they are almost same sizes if they are. So in this case, the interest rate is the same. So means that in terms of interest cost, they get the same money and the same cost while they utilize in a different way. So that is an important point. Dividend cover means they have 1 time money left to give dividend, which is a little bit smaller. and 2 times for 2024 for lith dig. So that is the important ratios. Now this is the information. As much you can utilize, you should do it, but we'll do a couple of exercises. You will see how the questions come, and it will take some of your stress.